Well, hello everyone. Welcome to Bartelle's Money Talk. I am Johnny. And today, listen, you would not believe this, but it's in reference to credit card debt. And so our conversation that we're going to have, to me, it kind of, I really couldn't believe it. Some of the conversation you're going to find out, is credit card really a debt? What it really is it something else? Is it going to challenge our current mindset to think on how we think about credit card and credit card debt? So stay tuned so you can hear this conversation. So the conversation we'll be having is with Mr. Tommy Kirkpatrick. So could you please introduce yourself, sir?
I'd be happy to. I'm a retired teacher and an author, and I've written a book on health and healing. In 2004, I was given a infomercial contract, and to test market different scenarios, I was on the radio for about 6 months with different kind of interviews. And then one of the talents got in trouble with the FTC. His book made claims of weight loss that weren't really true. And so the company and the FTC were in scrutiny. And so they canceled all the new contracts. So I was left with $85,000 of credit card debt. And so that put me in a little tailspin. But you're going, well, why'd you do that? Well, I was promised in a contract to make about $100,000 a month. So this would have been nothing, to do that. So I was depressed for about a month.
I can imagine.
My dad's a CPA, and so I had dawned on me that I was in school to be a CPA at the time and never became the credential that I can do the work. And I realized the bank didn't have an invoice, so I didn't have a debt. Then the other question is, well, they loaned you the money. Well, I never signed a promissory note, so that didn't work. And then my father-in-law at the time was a attorney and a judge, and we had long conversations about fraud undoes all contracts. So he helped me file 3 federal lawsuits. Now, I did it by myself, so I went into court, and things were going great. And all of a sudden, I was called in by the judge, and he said, Mr. Kirkpatrick, do you have a credit card? We got to start at the beginning. Oh, no, we'll get to that in the beginning. We'll get to that later. Do you have a credit card? I said, well, not really. It started off as a gift card. A gift card? Open your wallet up. So I did. Pull your card out, which I did. Read right there what it said. I said, credit card. You're an idiot. Get out of here.
Hold up, Tommy. Hold up. This is getting good. So let's back up a little bit, because I got to ask this question, because you're gonna say a few things in there: gift card, credit card, all these things, and we gonna build it to this gift card one. But I'm gonna go back to the credit card piece. So you was in this $85,000 worth of debt, and it was on this credit card, right? So let's go back. How did you come up with this ideal to say, okay, I need to get rid of this credit card debt, and I'm gonna go this route that you going here? How I'm gonna, as you say, nuke this credit card debt?
A law is language, and language is law. So if you say you have credit card debt, you've got the debt and you got to pay it. There's nothing you can do about it. Okay? We watch the TV news and we see a bank robbery, and they always say alleged. So all I'm asking you to do is to say the word alleged. Now that puts the onus on the bank's shoulders to make the proof of a debt. So if you go into court and say, I have credit card debt, you got it. There's nothing you can get out of it. And so this is not a scheme to get out of debt. If you're using the language of the bankster, then you're going to lose every single time.
So hold up. So let's go back. So if you use the word alleged, that is what really saved you from saying you have credit card debt. So now you in court and you use that word alleged. So alleged. So that means you really don't have this debt, that because you said it's alleged credit card debt. How does that work?
That's what you have to do, is start with the alleged. So now you have to have the bank prove that there's a debt. And now there is true credit cards. There is a true credit card debt. Let's do the differentiation.
Okay, all right.
You need tires, and you go to a tire store and you don't have the money. They say, oh, sir, fill out the in-store credit card application, and if you get approved, we'll put tires on your car and drive away. And so you do, and it works. Perfect. So at the end of the month, you get a statement. That's true. They have an outstanding unpaid invoice, which is true. The invoice says, on this day, you took our tires. We paid some guy to balance them and put them on your car, and you owe us this, and here are the taxes, and that's a debt. So that is a true credit card, okay? So how do you know the difference between a credit card and an alleged credit card? Is look at the back. If the back of Walmart or Amazon or any department store says issued by Bank of America, Citibank, Wells Fargo, Bank of London, Bank of Tokyo, any country this works, okay? If it's done that way, they don't have an invoice because they didn't put tires on your car. So there is no invoice.
So in other words, so I want to make sure I got this. In other words, I don't know, like you just said, Amazon, I guess, issued a card, and then on the back of it says Bank of Tommy. How about that? Bank of Tommy. And because it's an Amazon card and it say Bank of Tommy on the back, that's not a true credit card because it's being, I guess, supported by Bank of Tommy.
Well, we kind of go into that story, but that's the loan angle of it. So what
Okay,
we have to do is establish that the bank does not have an invoice. So if you say alleged, now they have to produce an invoice. They don't have one. So
they
they
don't have
cannot
one.
claim that they're the debt. They don't have a
Okay,
debt. Any accountant, any bookkeeper, any accounts payable person is going to know this. So it's not some wacky, weird sovereignty, bills of exchange, or some law that you're looking at. No, this is basic business. It's accounting. It's how you run your business every single day. So if someone sends you a statement out of the blue, you don't know who these people are. It's not a bill. It's just a statement. So they say something. That's all. So when my first job as an accountant, the CPA came over to me, and he was a nice guy, but I didn't know it. He walked into my office, looked at me, and pointed his finger at my face and said, "If you pay from a statement, I'm going to fire you." And he was very angry and had it red in his face. That put an impression on my head right away. Then he calmed down. And he says, "I do this every time because I have to impress upon you, you do not pay from a statement." We could have paid that bill last week. It's not a bill, it's just a statement, but you don't know that. So only pay from an invoice, and look over here, see in the corner? That's a department head signature. Only from someone who's already reviewed this invoice. We just don't pay any invoice that comes in. Because there's all kinds of stories about how this one guy had a company name that was similar to another name and sent it into, I don't know, what was in the government and other people, and they all got paid. He got paid $1 million by having fake invoices to companies. So they just pay it. Okay. So this is not the case. They don't have an invoice. They do not have any, they did not provide a service or goods to you to walk away and then to promise to pay back later.
so
So we can establish that one thing is they don't issue a credit card because there's no credit extended to you.
So okay, let's go this route. So you know how people get statements in the mail, right? Statements that say, "Hey, this is your credit card statement for this period. Here is the amount that is due," right? Here's the amount that's due. But you're saying since that statement, credit card statement, is not an invoice, it's not really an alleged, it's not really a bill, it's just a statement, pretty much.
Think about this here. You get a
Hmm.
statement from your checking account every month, right?
Okay.
Is that a bill?
No, it's
Not
just a
a bill.
statement.
Well, it's just a statement. See, it's just a statement. They'd start with your beginning balance, your deposits, the checks you wrote, the debit card you used, and other fees and other things taken out. Okay. And at the end up ending balance. It's all it is. The same thing as with your credit card.
I guess my next question is, if that's the case, how do people get caught up if they don't pay that credit card statement? If they don't pay it, how do they get caught up and they wind up going to collections and all of this stuff? How does that occur?
Oh, yeah. Right. So here is a question for you and to your audience. Is it possible, that includes you, your audience, and me too, is it possible that we have been lied to, indoctrinated, and brainwashed? Let me just ask you a question. Is it possible?
Well, yeah, if anything's possible, absolutely.
Anything's possible. Right. So we know a lie is a lie, but when it's told for 60 years, they've been lying to us. We believed it. But if we don't question it, then you've been brainwashed. All I want you to do, you, your audience, and me too, as a reminder, don't be brainwashed. Just ask the question, use the word alleged. So now they have to prove what they're saying. So now we have established that the bank does not have anything like this. So what's going on? Well, what the banks do is they're involved in loan making, right? That's what they do. So they loaned you the money. All right, fine. So when you when you go into a bank with no money, you want to come out with money, and you're not going to use a gun and stuff like that. Okay, you're not going to rob the place, but you're going to go to a bank with no money, and you want to walk out with money. You apply for a loan, right?
Yeah.
Okay. So if you get turned down, do you still get the loan?
Nope. Do not.
No, you don't get the loan. You're turned down. Go away. But if you
Correct.
are approved for the loan, you go into the bank and you fill out loan documents. Do you remember all those pages and
Oh
pages of
yeah.
loan documents?
Oh
Yeah.
yeah.
And then you also have to prove you have an income to pay the debt back.
Yeah.
The
You're
loan
right.
back. Right? If the bank was taken into court, the judge would say, you have been loaning money to people who can't pay it back. You're a predator. Am I right?
Yeah. You're right.
So the banks can't be predators, even though they are, but in this case, they can't be so obvious. So what they have to do is get you to prove that you have an income and say, look, judge, they falsify the documents. It's not our fault, but we believe that they could pay it back. Okay, moving forward. So then you also have to have collateral, like your home or your car. And let's say you want to have a personal loan and use your yacht as collateral. Well, then the bank can legally take it away from you, sell it. And if they come up short, too bad. That's their problem. If they come up long, meaning they made money, they have to give that money back to you. They can't just steal your property and pay off a
Right.
$100,000 loan with $1 million yacht. They can't do that. So they have to give you back the money, but you promised to put up this collateral. The third thing they do is they look at your credit report that shows history, but your credit score determines your interest rate. Okay. Am I right so far?
Yeah. I'm
And
spot
the
on.
last thing you do is you sign a promissory note. You sign a promise to pay them back. Now think about this. You all of a sudden buy a fractional share of a bank. You are now a bank holder, a bank shareholder. It's your bank. Do you really want your money? Because you got to think about it. It's your bank. It's your money. Do you really want your money to be loaned out to people who don't promise to pay it back?
Absolutely not.
Right. Would you loan money to people who won't be able to pay it back? Look, you
Absolutely
got
not.
$1.3 trillion of credit card debt. It's not debt at all. I'll
Yeah.
explain that in a second. This is what banks do, is they have been lying to you, indoctrinated you, and brainwashed all the attorneys, all the judges, all of us have been lied to, indoctrinated, and brainwashed because we haven't questioned this one bit. So I'm just the guy who's, wait a second, I'm an accountant. I know how to count. And I have a memory. In college, our accounting classes included banking. And what they supplied us with is the book called Modern Money Mechanics, put out by the Federal Reserve. Now, you don't have to believe anything I have to say today. Don't believe a word I say. Look at the show notes, and there'll be links. There'll be 3 simple links that talk about what I'm verifying what I'm saying, and send this podcast to your CPA or someone who's had at least one class of accounting, and they'll tell you I'm exactly 100% right. Okay. So what banks do is they accept a promissory note in exchange for writing numbers into your free checking account. So that's how they make loans. You
So
promise to pay them, then they write the numbers, any number they want. There's
so
nothing
so
holding them back. They can write $1
so
million,
Tommy.
$5 million, $1,000, $500 into a free checking account, and you've got the money.
Tommy, explain that. Explain the free checking account. Explain that.
So what happens is the banks are involved in advertising, right? They want to get you as a customer. And we see the advertising, and it costs them money, right? So the bank takes money, they spend it for advertising to get a new customer. Years ago, they would spend money to buy a wall clock or a toaster and get you to come into the bank, and they would hand you this toaster. It cost them money, but in the long run, they made money. Okay. There was an ad in a paper once, and it said, come into our bank for $25 deposit, and we'll match it in 90 days. So what did I do? I went into the bank, deposited my $25. 91 days later, I went into the bank, withdrew $50, $25 of mine, $25 of the bank, and close the account. Now I got a question for you. Did I rip off the bank?
No, I don't know, because that's what they said they was going to do.
So they said, did I steal from the bank?
No,
No. Was that immoral? What I did to the bank?
no. No.
No. Now remember that. This is important. At the end of this, I'm going to hit you back with this. It's not immoral to take a gift. Wasn't that a gift? It was a gift to get me to come to the bank for a toaster, or a gift for $25. And the fourth link in your show notes is going to be a guy on YouTube that says, do that. And I've made $361 so far. You go to a bank that offers this, will fulfill their terms and conditions, and then you withdraw the money and close the account. It's the same thing as when they sent you a $500 gift card. You would think it's a credit card. It says credit card on it, but that is what the lie is. So they are fraudulent. They are committing fraud upon the public. So they get you as a customer. So what's the big deal about that? I did this 2 months ago. You can do the same thing I did. Type it up and say, how much does a card member usually on average pay for their credit card? And it's $23.04 they pay on the fees. Now, my mom of 40 years, she never paid a penny. She never had those annual fee credit cards. She never had a penny. She never was late. So she always paid it on time. So she never had a problem. Okay. That's about 12%. So 78% of the people are paying $23.04 on average. So they're paying money for a free checking account.
So this is the catch. If it's free, why are you paying money?
Right. That's the fraud. That's why I'm trying to wake up people, is you don't have to pay $23 for a free checking account. So what they did is they sent you a gift card. Now, some people apply, and you can apply online and all that kind of stuff, and you walk into a store and say, oh, sir, but I have bad credit. It doesn't matter. Fill it out. They just want to try to put in the application, see if it works. So you get what they would call a credit card. I call it a gift card, because you didn't buy it, you didn't go into the bank and loan it, and you didn't borrow in that sense. So it's a gift. So they sent you a gift card. What did you do with your gift card? You went to Home Depot and you bought a toilet, a golden throne, let's say. So you're walking out of your toilet, and the guy at the door says, wait a second, sir, did you pay for that? And what do you have? You have a receipt. But $500 did not come out of your pocket, right?
Nope.
So who paid Home Depot that night or the next day?
That's the gift card. I guess it's the bank, right? It would be the gift card that's got from the bank.
Everybody says the bank. The bank paid Home Depot. But from what money? That's from their advertising budget. They have an advertising budget to get you to buy a toilet. Well, why would they spend $500? Because they know they're going to make $23.04 every month. So in about 24 months, they've got their money back, and you pay for years. So this is an inducement to get you to be a customer through fraud. So at the end of the month, you get a statement. You think it's a credit card statement. I owe the money, because they make it look, that's fraudulent. This is the same thing as your checking account statement. It's not an invoice, but they make you think it's an invoice.
It's an invoice.
And then they use the open line of credit. Then it's a loan. Well, which is it? A merchant can't loan you money at the same time say that you took my product out. You came into my general store and you took 20 pounds of flour and 5 pounds of sugar and this kind of stuff, and you'll pay me back when your crops come in. That's not happening. So what the bank did is they have a budget that's for their advertising. They got you as a customer. So what did you do? You're a good person. You're a moral person, and you wrote out a $500 check and mailed it to the bank.
Yeah, right? That's what it did. Yeah. Yes.
Okay. Here's the question. Is that the first time the bank has ever counted your money?
No. You mean the first time I put the money in the bank?
Just think from the bank's point of view. They mailed you a gift card that you didn't even apply for. They mailed it to you in this.
Right. Which they say it's a credit card.
Right. And then you wrote a check out. The question is that the first time the bank has ever received your money?
Oh, yes, because you just wrote the check out back to the bank. Yes.
Right. You wrote a check to the bank.
Right.
Banks are only about loans. So if you go into a bank with no money, you want to come out with money from a loan. It's the exact opposite, but still true. When you take money into a bank, you're loaning your money to the bank, and that's in the first show lane.
Right? Okay. All right. So
and it says right in there that the bank does not take depositors' money and loan it to you. Because again, being a fractional shareholder, would you want your bank to loan your money to people who won't pay or doesn't pay and can't pay and don't have the income and don't even promise to pay it back? No. So that's what they do. So what's happening is that you sent the check in and they counted it. That is a loan to the bank. Now they're obligated to hold that money in security for you. And if you spend down, it goes down, and their obligation to your loan goes down to zero. fine, they don't owe you anything. But here's the thing, the credit card statement says you got to pay it back up to $500. Who says I got to put $500 into my free check? It's free checking account. Yeah, they just don't give you any checks. The only way you access your money is through a debit card. So let's stop and think. I get a gift card in the mail that got me to be a customer. I sent my $500 to them. You don't pay back a gift. A gift is a gift. So you, on your own, you spent $500 of your own money and put it into a free checking account. Mm-hmm. They then, every subsequent purchase you're making, put in with your own money. So it's not $1.7 trillion credit card debt. That's all lie. If law is language, language is law. So if you use their language, you're sunk. So it's not. What they want the banks to do is fill their accounts up to $1.7 trillion, and now they'll be happy. All they're asking you to do is put that money back in your checking account. But you spent it. You don't need to put it back in. So there is no credit card debt. Bank issue alleged credit card debt.
So, okay, but this is the catch, right? And I hear all of this, what you're saying, right? But I'm sure if I'm listening to this episode right now, one thing I'm thinking in my mind is, okay, I fill out a credit card application to get this credit card. So is that not like me applying to get like this credit card from this bank? Would that not count as almost like a loan? I mean, it's not necessarily a loan, but is it almost like a loan? Or I mean, what is that if I'm applying for it on this application to get the credit card?
That's the whole lie. That's been the indoctrination, and it's been our brainwashing. So when you apply for a loan, you apply. If you get turned down, you don't get it. If you get the loan, then you go and you fill out loan documents, proof
Correct.
of
Yes.
income,
yes.
collateral, and you sign a promissory note, a promise to pay it back. You never sign a promise to pay this back because there was no loan. They gave you a wall clock. You don't have to pay the bank back, right?
So what would that credit card application be? What would that count as? If you fill it out and say, okay, what would that count as?
It's only an application.
Only application.
Use the word application. You apply. Okay. They can either accept you or reject you. If they accept you, then you have to go in and you fill out loan documents. And that's what it says at the top, a loan.
Right.
You have to prove your income and have a collateral and have your promise to pay, because that's the only way the federal banking laws allow you to do that.
And that's the loan. And that's the loan piece of it. But the credit card piece of it, you don't have to do none of that. You just put in the application. And if they say, yeah, you get a credit card, pretty much.
You get one. And that's the thing. So you can ask me, Tommy, do you have a credit card? Yes, I do. You have a credit card? Well, I was off grid for about 12 years. I had no activity at all, and I had no credit score. I had no credit report, completely zero, nothing. So when I got off the farm and it was going to come here to the Philippines, I knew I needed a credit card, because how am I going to get an airline? How am I going to rent a car without a credit card? So I had to get a credit card. So I applied to Capital One, and they gave me, notice the word, they gave me a $500 credit card. I didn't go in and buy one. I didn't go out there and swap it or loan it. They gave it to me. So wait a second. They gave this guy a $500 credit card with no score and no credit report? How does that happen? I was a previous customer. I was in their system. And that was one of the banks I sued for $35,000 of a credit card debt. So there you go. So, I won't be able to get a credit card. Well, it happened to me. And so I was in their system as a good customer because they removed the derogatory item off my credit report. So if they did that, I had to be a good customer, and they gave me that's the word, they gave me a $500 credit card. So instant score of about 550. Then I went into a credit union and borrowed some money, and I'm making payments on that. So that's showing history. Now I'm up to about 650 and about 625. And then every month I use the credit card 10%, never carried a balance, always paid it off. There's a lot of lies out there, but you might use 10% and pay it off immediately if you can. So you never want to be late. So then that brings me up to 704 right now, and I'm headed to 800. So that's what I'm trying to do. So I know the scam. I know it's my money in there. I know the whole story, but that's what. So your people can take a gift if they want to. So that's what I usually do when I help people eliminate their bank-issued alleged credit card debt. I usually find them money. That's the funniest thing. There's hidden money there that if you don't withdraw the money from your checking account and you close your account, they keep the money. Normally, when you close an account, they say, oh, sorry, sir, you're leaving us as a customer. Here's your $5.31 that's left in your account. Not with this one. The banks confiscate your money. So you have to withdraw the money first and then write the letter, because you're going to next ask, how do you do that? How do you resolve those issues? I write a letter to the bank, ask them to close your free checking account that's associated with that card. There you go.
Okay. I'm still here. I'm still here. Everybody knows that most credit cards are like a revolving type credit card or credit line, whatever you want to call it. So let's talk about that. So as a credit card, since it's revolving, right? Would they say, is that like a loan per se with the credit card? Or what would that be? Because it's a revolving thing. I mean, if you don't pay, you're gonna get a revolving credit. So you're gonna get interest on that thing. It's gonna keep going. It's gonna keep elevating until it's out of this world, right? So what do you consider that as?
And that's the thing, is the whole system is set up on a lie. So all you have to do is, it's not revolving credit. If you go into the bank, if you go into court and say, I have revolving credit, you've got it, you owe it, you pay it. There's no way you can get out of it. But you're using the banksters, you're using the criminal language. So we do not use the word credit because it's not credit extended to you. The only way they can do that is if you're a merchant, you went into the general store, hey, Charlie, how's it going? Yeah, I need 5 pounds of flour and 5 pounds of sugar and 5 pounds of flour and that stuff, and I'll pay you when my crops come in. Oh yeah, I trust you. So that's the credit that is
that's credit, right?
or a service. Okay. But then when you go for a loan, you have to go back to the federal banking regulations that say that the only way to issue a loan is if you sign a promissory note first. And it's back to logic. You're not going to loan money to people that won't pay it back. They don't even promise to pay it back because that's a gift. So here's what you do. Type online 1776 to present inflation rate for the United States, and you will see a chart that's flat line all the way across until right about World War II, and it takes off straight up. I believe the banks, the Federal Reserve, created the depression. They purposely raised the interest rates because they have the control of that. They choked the whole system. They were going to put all of us in a depression so they could squeeze out all these little banks and then consolidate. Once they were able to consolidate all the banks under their system, then what they did is they did the fractional banking. So they said, come in, sign a promissory note, and we will write numbers, any numbers they want, into the free checking account. And all of a sudden, people got money to spend. So when you put more currency into the economy, it makes the prices rise. But if you know you're going to do that, then what you do is you take out loans now, make money on it, but now you're paying it back with cheaper dollars. So real quick example, my wife at the time, she was a nurse and she got a student loan, and every month was $100 payment. And she was getting paid about $15, $17 an hour back in the early part of in the 1980s and stuff like that. So that was a good wage back then, but it took her about 7 hours to make the money back, right? About 5 years later, she got more skill and she went to another, she did like per diem, and she was paid $25 an hour. So it only took her 4 hours to pay the loan back. That's the whole system. So if you know you're going to create inflation, if you're in on it, like the whole wealthy and the rich are in on the deal, they know to borrow now and they'll pay it back in cheaper dollars. So that's how they're raking us in. So that's what's going on. They're creating the inflation by doing this phony thing about the credit. So writing numbers into a bank, that's all they're doing. So it's not revolving credit. We don't use those words. It's your free checking account. It's your money. So using our language, which is truthful language, any accountant will know that. Anyone who's had one class of accounting can tell you that I'm 100% correct in what I'm saying.
Let me throw another curve at you here. So
come on, bring them on. I'm ready.
if you have a credit card, right, and you fill out the application or whatever, on the application there's usually terms and conditions tied to the application. Would that be considered like a contract because those terms and conditions are tied to the application that you filled out for the credit card?
You're absolutely 100% correct. So if you have an agreement with somebody, and that's for Latin for to please. So the word agreement means to please. So one side gets pleased, the other side gets pleased. Everybody's happy. So then you have to fulfill your contractual obligations. That's what's said in your offer and your acceptance. And now you have a contract. That's true.
Right.
However, fraud undoes all contracts. And it's been reported over and over again. And that's in your third link in the show notes, is the Supreme Court has ruled over and over again that fraud undoes all contracts. You have to have disclosure or that there's no deal. So if you buy a house and they have all this toxic waste underneath it and they didn't disclose it, you don't have to keep paying it and live in that house and die from the toxic chemicals. So the courts are not set up for criminals to come into court and use the court system against their victim. You are a victim. You are a crime victim. I'm trying to explain this to you. You are the victim. You have taken on the Stockholm syndrome. And that is where you identify with your abductors, the abusers. You're identifying with them. So you're identifying yourself with a bank. So
Wow.
stop that and start seeing yourself as a crime victim. Now, there's no contract, and that's what you do. So in that letter, you send it off saying, I want to close the account. That's pretty weak. But when I had a charity, we revamped it to be credit repair. And so many of the clients coming in had some credit card debt. And I would just write a letter and it was gone off their credit report. No problem at all. Never questioned. But then when they had bigger amounts, 50, 100,000, the bank pushed back until they found out who we were and they stopped doing it, because we would then file a counter lawsuit and show the bank that they have to have the proof, and they didn't have it. So they would work a deal out. It was so funny to have the judges see our contractual agreement nullified, all this credit card nullified. And he's going, what is going on here? What do these people have on it? I've heard the judge actually mutter that underneath his voice, because one of our clients represented himself. I was there to help him, but I couldn't speak for him. So he went into court, and then we negotiated a deal with the attorney, and we just asked him, where's the invoice? And they went, we don't have one. Well, you have no debt. Well, you have a loan. Well, where's the promissory note? And the attorney for the bank had to agree that they didn't have it. So we worked out a little piece of paper that said, here's the deal. They're going to take it off the credit report. They're not going to issue a 1099-C, which is
Wow.
because that's where the IRS, that whole
Yeah.
so, and that's what
Hmm.
happened. So it works. So in the letter, that's pretty weak. Have your CPA write a letter that says, one, there's no invoice. Two, there's no promissory note, so there's no loan. There's no revolving credit. Have your attorney, now we're talking $200 or $300. Another thing called Legal Shield. And for $29, you get an attorney for a month. That's all you do is spend it for 1 month and then cancel it. And they have the attorney write a letter to the bank saying fraud undoes all contracts. There is no contractual agreement.
Wow. That's pretty. I'm gonna tell you, Tommy. I never heard it quite like this before. When it comes to nuking your credit card debt, never heard it like this. But listeners, one thing I can say is, if probably you never heard it like that, like Tommy just explained it either. Because I always, and I'll use my own self. If you had credit card debt, that's what you called it, right? Because that's what you were kind of led to think it was, your credit card debt. I ain't never heard nobody say alleged before. You the first. So I must admit that was pretty informational to kind of reveal that, because if a lot of people really look at this episode and they learn that secret, wow, it could be a lot of people getting out of credit card debt. The alleged credit card debt.
There you go. Very good.
The alleged. All right, Tommy. So this is what I would ask you. I usually like to have the audience give the audience three golden nuggets to leave with, so they could have something. Three golden nuggets that you would tell anybody if they're dealing with alleged credit card debt.
Well, first of all, my two older brothers wore peace buttons on them in the 60s. And one said, question authority. A lot of those people that were wearing those buttons are now in government, and now it's unquestionable authority. So that's what I'm trying to say. The second nugget would be, you've been lied to, indoctrinated, and brainwashed. Just start saying the word alleged and make them prove it. Okay. And let me see. The third one would be that I can't think of it right now. You got me on the spot. But yeah, there's another good one too. I'll think of it later. I went, oh man, I should have mentioned that. But that's okay. That's good enough. So just question authority and use the word alleged. And so I offer a free 15-minute consultation. So it's in the show notes. You can reach me at Tommy A. Kirkpatrick on Facebook. And if you do that, I'll send you my $69 book for free. How to nuke your credit card debt. So I just wanted to help you out.
Well, Tommy, listen, thank you for sharing all this valuable information on how to nuke your credit card debt. It was valuable to me. Didn't know it. Learned something new today. So I appreciate you being on the show, talking about how to nuke your credit card debt, and that one word, alleged credit card debt, would make a big difference. So thank you, Tommy, for being on the show. And
I'll
guess
see you later.
yes, audience, if you like this content, please like, share, and subscribe. This is real valuable content, I think, because Tom is talking about something that I never heard of before, And I don't know if some of the audience may have heard of it before. I know I haven't, but again, share the content. So until next time on Bartelle's Money Talk, we thank you for joining us, and we really appreciate your time.